So going back to my markets, right? In mid-April, I actually created a video about the S&P 500, and at that time, I think the S&P was trading at about 6,500, 6,600. Now we're touching about 7,400. And I remember creating the video and I didn't post it. I was like, we should buy this. You should not be scared. I know it felt like very nerve-wracking to see the market dip, but I think one of the other things that people should keep in mind investing in the market is what is the long-term trajectory of the S&P. If we are, God forbid, going into a recession, and obviously that the S&P will not do well for the year, but let's say if you listen to different strategists, you follow different markets, and they tell you that the S&P is going higher. Why? Because earnings are going higher, productivity is going higher, companies are beating their estimates, so the S&P will go higher over time. Then for you shouldn't be scared of like dips. You should buy these short dips, because in the end the long-term average is higher, right? The long-term end goal. So let's just focus on this channel is not for financial advice. It's basically to educate you, right? Or to educate everybody, or to give a summary of what happened, right? So I've been listening to different strategists on the streets. You've got Deutsche, you've got I think it's another one. So they've basically been putting out their targets. Ed Yardani is a great person I listen to. They've been saying that the S&P could go to 7,700, 7,800, 8,000 even on the high end because earnings are doing so well. CapEx is the reason for all the earnings. I mean, we do have certain parts of the economy that are slowing. Housing is in a stalemate. But the job creation, I mean, we're just in a normal balanced labor market. There's not that much job creation. It's not really, but then the capex spending is so much that companies' earnings are increasing, and that will trigger the GDP. So what I'm basically saying, if you have money right now, you should invest. You shouldn't wait. You should definitely dollar cost average. You should put your money in a low index fund. VOO is a very good fund. The one that I use is VFIX, VFAX, I think. It's a Vanguard fund. It tracks the S&P. So